Welcome back to BizTales. If you've been online recently, you've probably heard a lot about NFTs, these digital assets that people are spending millions on, from digital art to virtual real estate. But what exactly are NFTs? And more importantly, should you consider them as part of your investment strategy? In today's video, I'll break down everything you need to know about NFTs, how they work, and whether they're worth your hard-earned money. NFTs have exploded in popularity over the last few years, creating a lot of buzz and confusion. Some people see NFTs as the future of digital ownership, while others think they're just a passing trend. By the end of this video, you'll have a clear understanding of what NFTs are, the risks involved, and whether they might be a good fit for your investment portfolio. Part 1. What are NFTs? Let's start with the basics. NFT stands for Non-Fungible Token. This might sound complicated, but it's actually pretty straightforward. Non-fungible just means that the item is unique and can't be exchanged on a one-to-one basis with something else. So, while $1 or 1 Bitcoin can be traded for another of equal value, NFTs represent one-of-a-kind items that are unique digital assets. NFTs are stored on a blockchain, a secure digital ledger that records transactions. This blockchain technology ensures the authenticity and ownership of each NFT, making it impossible to duplicate or counterfeit. Most NFTs are created on the Ethereum blockchain, although other platforms, like Solana and Polygon, are starting to support them too. Part 2. How NFTs work and what they represent. So, what do these digital assets actually represent? An NFT can represent just about anything digital, including artwork, music, video clips, virtual real estate, in-game items, or even tweets. When you buy an NFT, you're buying a unique token that proves you own a specific version of a digital item. Think of it like owning a rare trading card. The digital file might be viewable by others online, but only you hold the authentic ownership certificate. NFTs are bought and sold on NFT marketplaces like OpenSea, Rarible, and Foundation. When you buy an NFT, that transaction is recorded on the blockchain, which serves as proof that you own that particular asset. And because of the blockchain, that ownership is verifiable and can't be changed or duplicated by anyone else. Part 3. Why are NFTs so popular? You might wonder, why are NFTs generating so much hype? A big part of the appeal lies in their scarcity and exclusivity. Artists, musicians, and creators can release limited editions of their work, making NFTs a way for collectors to own something rare in the digital world. For collectors, owning an NFT can feel like owning an original piece of art. Another reason for the rise of NFTs is the potential for creators to make money. Before NFTs, it was challenging for digital artists and creators to sell their work without fear of it being copied or shared for free. NFTs solve this issue by providing a way to sell digital creations while maintaining control over ownership and copyright. Part 4. Should you invest in NFTs? The pros and cons. Now, let's get to the big question. Should you invest in NFTs? Let's weigh some of the pros and cons so you can make an informed decision. Per se, ownership and exclusivity. Buying an NFT means you're purchasing a one-of-a-kind asset, which could increase in value over time. Supporting creators. When you buy an NFT, you're often supporting independent artists and creators directly. Potential for appreciation. Some NFTs have increased significantly in value, creating opportunities for high returns. Cons. High volatility. The NFT market is still very young, which means prices can swing wildly. An NFT that's valuable today might be worth much less tomorrow. Lack of tangibility. NFTs represent digital ownership, so there's no physical asset attached. For some people, the idea of owning a digital asset feels intangible. Environmental concerns. Since NFTs are mostly hosted on the Ethereum blockchain, they can be energy-intensive, raising concerns over environmental impact. NFTs can be exciting, but remember, they're also a high-risk investment. Just like with any investment, there's no guarantee that their value will go up. Part 5. Types of NFTs you can invest in. If you're considering investing in NFTs, it helps to understand the different types available. Here are a few popular categories. Digital art. This is by far the most popular category, with artists creating digital paintings, animations, and 3D art as NFTs. Music and media. Musicians are using NFTs to sell exclusive tracks, albums, or even concert tickets. Gaming and virtual worlds. In games and virtual worlds like Decentraland or The Sandbox, players can buy virtual land, characters, or items as NFTs. Collectibles. NFTs are also used for collectibles, like digital trading cards that are unique and limited edition. Each category has its own audience, so it's worth exploring what type of NFT aligns with your interests if you decide to get involved. Part 6. How to get started with NFT investing. If you're new to NFTs and want to test the waters, here's how to get started. Set up a digital wallet. First, you'll need a digital wallet that supports NFTs. Popular options include MetaMask for desktop and Trust Wallet for mobile. Buy cryptocurrency. Most NFTs are bought with Ethereum, ETH, so you'll need to buy some ETH and transfer it to your wallet. Choose an NFT marketplace. Open an account on a marketplace like OpenSea, Rarible, or Foundation, where you can browse and buy NFTs. Research before you buy. Just like with any investment, it's crucial to do your research. Check the creator's background, the rarity of the NFT, and the market trends before making a purchase. Start small, especially if you're new. You don't need to spend a fortune to get involved in the NFT space. Remember, these are highly speculative assets, and it's wise to approach with caution. Part 7. Understanding the risks of NFT investing. Like any investment, NFTs come with their own set of risks. First, there's the risk of market volatility. The NFT market can be unpredictable and prices can change quickly. Additionally, there's the possibility of hype-driven demand. Some NFTs are popular for a short time, but then lose value as trends shift. Another risk is liquidity, meaning that if you need to sell an NFT quickly, it may not be easy to find a buyer at your desired price. And finally, because the NFT space is relatively new, there's still a lot of uncertainty around regulation. Governments may impose rules on NFTs in the future, which could impact their value. Closing and call to action. To wrap it up, NFTs are an exciting and unique form of digital ownership, offering new opportunities for both creators and collectors. But they're not for everyone. If you're considering investing, start small, do your research, and be prepared for the risks. What do you think about NFTs? Would you invest in one? Let us know in the comments below, and if you found this video helpful, give it a thumbs up and subscribe to BizTales for more investing insights and tips on emerging trends like NFTs. Thanks for watching, and we'll see you next time.